Imagine waking up tomorrow, checking your phone, and seeing this massive breaking news headline. SpaceX is officially going public. For over 2 decades, Elon Musk has built one of the most valuable private companies, carefully keeping shares out of the public markets. And they have the operational track record to back up the public profile. They land reusable rockets on a weekly basis, launch thousands of satellites, and secure billions in government contracts. For many, an IPO announcement triggers an immediate psychological reaction. They remember watching Tesla's stock price run up over the last decade, and they regret missing out on those early gains. That combination, watching a company dominate a physical industry while carrying the weight of past financial regret, guarantees that millions of eager retail investors will frantically scramble to their brokers to buy shares the minute the market opens. History shows us what happens when massive crowds violently rush into a highly anticipated market debut. The sheer volume of demand instantly warps the price. So if you manage to buy shares on day one, are you securing generational wealth, or are you walking straight into an engineered trap? To answer that, we have to look at a harsh reality of the stock market. An incredible company can easily be a terrible financial investment if you pay the wrong price. The reason the hype is so potent is that SpaceX already controls tangible, massive revenue streams today. Look at Starlink. They are rapidly building a global satellite internet monopoly with real paying customers. The projected space economy is scaling to $1 trillion. SpaceX occupies the vast majority of this established infrastructure. On top of that, Wall Street models massive speculative upside, including future contracts for deep space exploration and off-world AI networks. Because the underlying business is undeniably dominant, the narrative is completely believable. And a highly believable narrative is the exact bait required to set a market trap. That trap is built on the mechanics of a hype cycle. On the morning of an IPO, the opening stock price isn't determined by accounting math or cash flow. It is driven entirely by raw demand and public sentiment. This graph tracks 2 metrics: intrinsic value and stock price. When retail investors relentlessly buy, the stock price spikes violently, disconnecting from actual value. This massive gap is the hype premium. You are paying for decades of future growth that hasn't happened yet. Eventually, the momentum stalls. Quarterly earnings reports force the company to open its books and justify that towering valuation with actual profits. The excitement fades. Then comes the correction. The inflated stock price violently collapses to meet the reality of the balance sheet. Late-arriving investors who bought at a peak lose a massive percentage of their capital. And the cruelest part is that the company itself is usually doing perfectly fine. The investors just paid the wrong price. This means the greatest danger in a potential SpaceX IPO isn't a grounded rocket or a new competitor entering the market. The ultimate risk is your own psychology. It's the susceptibility to breaking news, the fear of missing out, and the urge to follow the crowd. Surviving a high-profile IPO requires you to detach your awe of space exploration from the cold mathematical discipline of capital allocation. While amateurs feel an overwhelming urge to buy on day one, professional investors use a completely different playbook. They wait. Before they deploy capital, they ask 3 precise questions. Is the company currently profitable? Is the valuation reasonable based on actual cash flow? And what long-term risks threaten the core business model? Patience is the most effective tool an investor has. The goal is to wait for the hype cycle to collapse, let the emotional premium burn off, and buy the stock at its true value. A SpaceX public offering could generate immense wealth for shareholders over the next decade, but that wealth will only go to those who maintain the discipline to master their own psychology, while the rest of the market falls into the trap.